Listen, friends, you cannot hustle your way to wealth. No, you can't. You do whatever it is that you do, be it a 9 to 5, a business, or any little hustle to make money. But you have to spend that money on income producing assets. And that's where a REIT comes into play. REIT, which stands for Real Estate Investment Trust, is an income producing asset. By law, REITs must pay you, must pay me, and every other investor at least 90% of whatever income they make from rent or interest income on a consistent basis in the form of dividends. So if you want to get into real estate, but you don't have all the money for down payment and the many other fees of a property, or you just don't want to deal with the mental and physical stress of owning real estate, which, guys, it's a lot, then investing in a REIT is the way to go. With a REIT, all you have to do is put your money to work and you get paid in the form of dividends for the money you've put in. I made this video right here sharing 3 best REITs you can buy now. So if you haven't watched that, be sure to check it out. Today's video is a little different as I'll be sharing the 5 best REIT ETFs to help diversify your portfolio and hedge your risk. You know, the same way an ETF is a less risky approach to invest in the stock market as compared to buying individual stocks. That is exactly how it works for REITs as well. A REIT ETF holds several REITs and other real estate stock, which gives investors broad exposure to the sector and helps reduce risk. So let's get right into the business of the day. Starting strong at number 1 is by far the most popular REIT ETF, Vanguard Real Estate ETF with ticker symbol VNQ. This ETF invests in stocks issued by REITs, and its goal is to closely track the return of the MSCI US Investable Market Real Estate 2550 Index with net assets of $37 billion. This broad ETF has about 155 stocks in its holdings, and the top 5 includes Vanguard Real Estate 2 Index Fund, Prologis, American Tower, Equinix, and Welltower Inc. One factor that sets VNQ apart from the other ETFs is the expense ratio of 0.13%, which is relatively cheaper than the industry average of similar funds. And this means you as an investor, you get to keep more of your returns. Dividend yield is around the 3.4% mark, and it is spread out across various sectors, as you can see on the screen. Next on our list is Schwab US REIT ETF, SCHH. SCHH's goal is to track the total return of an index composed of US real estate investment trust classified as equities. Unlike other ETFs, SCHH does not include non-REIT real estate stocks in their portfolio, while also excluding mortgage REITs and hybrid REITs. Like many other REIT ETFs, the Schwab fund holds REITs based on their market cap instead of using an equal weighting system. So it has nearly identical top holdings as most other top REIT ETFs. As a matter of fact, it has 117 securities in its portfolio, and its top 5 holdings are Prologis, American Tower Corporation, Equinix, Welltower, and Simon Property Group Inc. You can also see the weighting across the different sectors, with retail and telecom tower REITs leading the ranks. Expense ratio is pretty decent at 0.07%, lower than that of VNQ, and it has a year-to-date return of 10.7%. Let's not forget the lucrative cash flow from dividends, as this ETF has a dividend yield of about 3.9%. The ETF was launched in 2011, so it's been around for some time, and total net assets as of the time of this recording is $6 billion. Number 3 on the list is BlackRock's iShares US Real Estate ETF with ticker symbol IYR. This ETF provides exposure to US real estate companies and REITs. IYR was launched in year 2000, and it has about 73 stock holdings in its portfolio. The top 5 holdings of IYR is quite similar to the 2 ETFs that I already shared in this video, except for Public Storage REIT PSA that isn't a part of the top 5 of VNQ and SCHH. The top 5 REITs in the portfolio operate across several property types, including industrial, communications infrastructure, data centers, and self-storage REITs. Net assets of this fund is $4.7 billion with a yield of 3.1%. One of the downfalls of this REIT ETF is its expense ratio. At 0.39%, it's well above the industry average. And you know what this means, right? To your returns. Higher fees usually translates to less money in your pocket. The next ETF on the list is the Real Estate Select Sector SPDR Fund with ticker symbol XLRE. This is an interesting and a different kind of ETF because it only holds REITs in the S&P 500 index, Which sort of limits its investment pool? The best way to think about XLRE is that it allows you to invest in the real estate sector of the S&P 500 index. It was launched in 2015 and only has 31 holdings in its portfolio. Yet again, Prologis, American Tower, Equinix Inc., Welltower, and Public Storage are the top 5 holdings. Because this ETF concentrates only on REITs in the S&P 500, its top 10 holdings make up about 60% of its portfolio. This ETF has a low expense ratio of 0.09% with a year-to-date performance of 10.6%. Assets under management is a whopping $8 billion. And speaking of attractive dividends, it has a yield of 3.3%. If you're an investor who wants a low-cost exposure to the biggest REITs, I can tell you for free that XLRE is an ideal and a solid option for you. The last ETF in today's video is Vanguard Global ex-US Real Estate ETF, VNQI. I had to throw this somewhere in the mix because most of the ETFs I have shared so far are heavily concentrated in the US market, and you know I always gone for some sort of geographical diversification. VNQI invests in stocks in the S&P Global ex-US Property Index, which represents real estate stocks in more than 30 countries outside the US. This definitely provides an easy way for you to get exposure to international REIT equity markets. Expense ratio is very similar to that of VNQ at 0.12%, and it has 648 stocks in its portfolio. You can see the very widespread geographical footprint, and the top holdings is nothing like what we have seen so far in this video. Total net assets is sitting right at $3.9 billion with a year-to-date return of 8%. Finally, on this one, dividend yield is at 3.9%. While I share a couple of facts regarding the ETF's past performance, always remember that past performance is never a guarantee of future results. And all the information that I provide on this channel is not financial advice, but financial education. So always do your research and make sure you're comfortable and very much knowledgeable about whatever it is that you're investing in. Which of these do you have in your portfolio? If I missed out any of your favorites, let's chat in the comment section. My name is Ayoluwa, a finance professional and a certified accountant who loves to talk about making and multiplying money. Thanks for watching, and if you enjoyed this video, please like, share, and subscribe as this gestures keeps me going. See you in the next one, and cheers to a life of options. Bye.